Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. I want to talk about the equity markets this morning. We're seeing a pretty good bounce where Dow's up now about 180 points. That's pretty interesting after the huge reversals we saw last Thursday and Friday after the Fed decisions. The market didn't like what the Fed had to say and the markets reversed to the downside. Got hit pretty hard Thursday and Friday. Volume swelled due to options expiration. So once again, all technicians were calling for a retest of the August lows. And that's to be seen if that's going to happen. Basically, I'm a little bit more positive on this market, and let me tell you why. Some of the things we're seeing is economically sensitive groups, the home builders, which we talked about, continue to lead this market. Some of those stocks in that industry group are hitting new highs. Banks are doing pretty well, and they didn't get hit that hard, even though interest rates didn't go up. Consumer discretionary stocks are doing very well. And then we see that there is an appetite for risk, and we see that through some of the smaller biotech companies, the highly speculative ones who aren't really making money yet, and some of those stocks are hitting new high. And I've talked about those stocks over the last few weeks. So one of the things we want to focus again today is talk about relative strength. That is the ability of one stock to outperform the general market. And basically our litmus test for that is, when the market gets hit, does your stock fall and break open like an egg, or does it bounce like a tennis ball? Because those stocks that are bouncing back up quickly like a tennis ball, those are the stocks that have the higher relative strength and some of the stocks you want to be in. And that's a sign that institutions did not flee those stocks but are holding on to those shares, and there's not that many of them to be sold. So for example, one of the stocks that we keep adding to at these levels is Facebook, symbol FB. Pretty much got hit with the whole market, bounced back very quickly, reclaimed its 50-day line at about $92, and this morning it's trading $94, $95. You can continue to add shares here if you believe the market will continue higher eventually. And you can put in a stop somewhere between that $92, $90 level. It's a pretty tight stop. If it were to fall there, it would indicate that perhaps the trade isn't working, or it's just not the right time in the market. Another stock that was a huge leader was Palo Alto Networks. That symbol is PANW. Basically ran from about $70 to $200 over the last year. Corrected with the market, got hit pretty hard, bounced off its 200-day moving average, right about 160 level, somewhere right in there, 165. And they came out with earnings, and again, earnings accelerated. Now, earnings have been accelerating over the last few quarters, as have been sales. Management gave good guidance going forward. And again, the stock bounced very good on strong volume, relative strength line leading. It's above its 50-day moving average, trading right about that $186 level. So you can try to add shares there. And of course, put in a stop maybe somewhere about the 180, 177 level. Because again, if the trade doesn't work, it means something's wrong with the story, or the time is just not right for the market. So, as always, don't take my word for it. Let price and volume be your guide. Stay flexible. The market will be volatile, but as I've said before, if everyone's waiting for a retest of the lows, the market never wants to deliver what everyone's looking for. It's always going to do something different. That's the nature of the market. So have a great trading week. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.